Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for April the 19th to the 23rd, 2021. First off, hope you had a good trading week, and second off, just want to announce a small announcement, nothing major here, but as you may have heard from the intro, I am now renaming this video series to Market Watch instead of our usual Market Outlook series. So I think the new name is more appropriate or apropos for what I actually do here, and that is we're not trying to predict price. And if you've been following this video series for the past couple of years, you've seen that over the past couple of years, for the most part, we've stayed on the right side of price, and that hasn't been because we're trying to predict markets. In fact, what we're trying to do here is basically see what markets are doing and responding appropriately. We're not trying to get ahead of a price here. In most cases, when we try to get ahead of price, we usually get steamrolled. So the reason why we've been able to stay on the right side of price for most of this time, if not all the time, is because we're simply followers of price, and in the end, we're not trying to catch the tops in every single turn of the market. We're trying to catch the bulk of the moves as traders. I think that's an easier game versus trying to prognosticate and call every single small wiggle in every single top and bottom. So going forward, we'll call this series Market Watch, and let's continue to stay on the right side of price. So let's get into the coming week now and what I'll be watching for this coming week. So as we said over the past month or so, what we've basically been watching is a slow melt up in equities. So as most things go, things typically go slowly in the beginning and then all at once, right? So we had the some news that caused the markets to sell off, especially the Qs. So namely that family fund, Archegos, however you want to pronounce it, that basically blew up and caused a strong pullback in the Qs. And as we said in many videos in the past, good rallies are built on the backs of broken trades and broken traders. So this past week, the Qs caught up with the Dow, with the SPY, and hit all-time highs as you've been watching for the past several weeks now. So congrats, Qs holders. We got those all-time highs. So where do we go from here? What do we watch for? Well, what I'm watching for this week is for the Russell to begin to play some catch-up, and for the emerging markets to perhaps do some catch-up as well. And most of my attention of the past couple of weeks, maybe even longer than now, has been on the crypto markets, because that has been on fire and a real contrast to the kind of the slower moving equities markets. So that being said, let's get into the charts. So as we get into the charts here, let's go to the VIX chart. This chart here pretty much says it all. The VXX, the ETN product, has been going momentum down for the past several months now, and this is at very low levels now on the VXX, and we're just going right in the lows. So if you look at the actual, let's finish with this chart first, and then we'll get to one of the other products that tracks the VIX more, I think more accurately, because the VXX obviously is an ETN, and that has some decay built into it. So this thing will, as I said many times before, will basically go to zero until they reverse split it, which is going to have to happen at this rate. So we're Momo down on the monthly chart, and that's pretty much all you need to know. This thing is going Momo down. So until that changes, the trend is to the downside, and every single pop has been sold. It's rarely a good time to be a buyer of the VIX, and this is the environment now where we're actually going further down on this cascade downwards, because we're doing the Bollinger Band walk. So everything that's a pop intra-week has been sold, and that's why we have this bigger picture. This is why I always start with these charts, the higher time frame charts, is because it's very, very easy to lose the forest of the trees intra-week. I see traders getting caught up in the intra-week volatility, and they'll take trades that are counter the trend, and eventually those trades don't really go that far, because the trend, if you haven't noticed by now, is to the downside on the VIX, and that's upside on the equities market, and it's been that way for a while now. So every single pop, sell it, and until this Bollinger Band walk gets extinguished, right? Until we break the Bollinger Band walk, the trend is to the downside. So I'm going to redraw our lines here, and basically we're waiting for the prior week's high to get broken. That will tell us that the Bollinger Band walk has been broken. And just like we saw with the bonds and the gold and the oil charts, they're all doing the same thing, right? So when these things break the Bollinger Band walk, that's when you want to pay attention. Otherwise, the path of least resistance is to follow price. That's right now, it's downwards on the VIX. So VIX continues this melt to the downside. And so if you look, let's say intra-week here on the, actually, let's look at the two-day chart first off. It's going Momo down on the 2-day chart as well. So look, let me go back quickly here to the VIX chart on the weekly chart. We've had now 6 consecutive weeks of lower lows. 1, 2, 3, 4, 5, 6. We've had no higher highs, right? Since way back here. This is Feb. We had that quick outside week. Then the buyers lost control when it went stalemate here with an inside week. And ever since then, it's been decay and a melt. And we've had no higher highs now for 6, 1, 2, 3, 4, 5, 6, right? 6 weeks. So we have momentum going to the downside on the monthly chart. We have momentum on the 2-day chart as well. This is a Momo down move. Momo down. So we can certainly go even further down because it's not down the Bollinger Band walk. If they really want to push it downward and really steepen the curve, they could definitely do that. But right now we're just steadily declining, Momo down on the weekly chart. So this means, something like this, as I mentioned, people get chopped up, right? So they see a pop on the VIX on one day. This war's up 2%, and they think the world's going to end. And the reality is that that's just another selling event, and they take it down further. So this coming week, once again, we're watching that Momo down. Sorry, not the Momo down, but the Bollinger Band chart on the weekly. All right, and we're seeing how far this thing's going to run to the downside. It can go a lot farther than you think, right? As the case, once you get momentum involved, and then it can go a lot further, even though it looks stretched and maybe it doesn't seem like you have proper valuations. The game of trading, as we know, it's mostly supply and demand driven. So right now, the supply is outstripping the demand. So there is really no buyers of the VIX here. They're getting run over. So they continue to sell that volatility. So if we look at that, the VIX futures chart now, I think it's maybe more illustrative. Let's go to the monthly chart. Let's go to the VIX futures contract, and let's pull it up here. You can see now that it is past 3 months, it is just going to the downside here, and we're now trading at around the 17 area. So volatility is coming a long way from back in the start of the pandemic back here in January, March. Sorry, this is Jan here. This is Feb. That's March. We had readings here of above 80. Right now, look at that. We're down at 17. Now we're not down here yet, where we're back at the 9s and the mids and the 10s. So the low teens, but certainly not the volatile period we had months prior. This means that the trading opportunities begin to shrink because, frankly, when you have lower volatility, that there's just less opportunity. So for intraday traders, especially, this means you have to adjust, and the stuff that you're doing up here is not the stuff you're going to be doing down here. So if you didn't trade the 2017 market, it was a pretty slow grind. It was a couple of years there where it was pretty slow stuff, and you just have to adjust, right? If you're going to stay in the game for a while, then the game is to adjust and find things that are going to work for you to take advantage of these lower volatility environments. So again, we're still at 17, so we're still double the amount we were at back here in 2017, where it was very, very slow. And you could just watch paint dry. I remember those days of trading the ES or watching the ES, and maybe you had like 5-point days. Remember those days, guys? It was painful, right? It was painful for us intraday traders. And if you didn't trade those markets, then frankly, what you need to get used to here was if you get back down these levels of volatility, it's all about taking, riding these swing trades further, longer, and letting the trend play itself out. Because if it gets back down here to the low teens, back below 10 again, yeah, it's about taking overnight risk and letting that trend play out. That is slowly watch the grind higher on the equities. So let's go to SPY now and see what we saw this past week. So on the SPY chart, SPY hit some new all-time highs again. So we're seeing all-time highs on the SPY, and the SPY now, man, we've had 6 consecutive months of higher highs. So that's really the mirror opposite of the VIX. 1, 2, 3, 4, 5, 6 consecutive months of higher highs, which all started on this outside inside, right? Outside inside, fresh quarter here back in 2020, and it's been all upside ever since. Every single pullback was a viable opportunity. More than likely, we're going to end the month. Well, it's not gonna say we're gonna end month green, because anything could happen. It could certainly come down to here, but the chance of us seeing a price reversal on this higher time frame chart is very, very slim. If you don't know the price action by now, what we need to see for a price reversal is for this prior month's low to get taken out. So right now we're trading up here, right? We're up 5.28% in the month already. That means you have to come all the way back through here and come out the other side. So take out March's lows as well. That's a lot of movement. That has to happen with 2 trading weeks left. Not saying that's impossible, but something quite big would have to happen, because you have to come through that range, break below the quarterly open, and then take all that low, and that would create what? An outside bar. So even if you get an outside bar, that's not necessarily the end of the game, right? Doesn't mean you get into a bear market right away. It just means you need to perk up again, because you have more volatility in the market, because people have taken out both sides of that range. That's when you want to perk up. That doesn't mean you get ultra bearish right away. You're gonna, you still have that outside bar, and as we know, if an outside bar, if you've been watching these videos, outside bars, then the outside bar itself doesn't really signal anything in particular until you get that confirmation bar. So here, the outside bar turned into an inside bar, and you know how that played out. You get 6 consecutive months of higher highs. You could also play it like this. You get an outside bar, right? That outside bar was back in February of 2020. That's the corona. That's the big, when the pandemic started in 2020. And then you get outside bar down. That's what I meant with the downside. That's different, right? So you get a Momo down. That's why I call it Momo down. Then you can get some follow through. But, the reality here is that the reason why this bar was possible, this big outside bar, is because this bar here of January was so small. Remember, going into January of 2020, things were just perfect for the markets, right? It seemed to be like a Goldilocks economy. Everything was going well, and things were just kind of ratcheting up and just going to all-time highs. That was Momo up. The way that Momo up got extinguished was right there. When that low got taken out, that Momo got extinguished. That outside bar was significant because of that situation, and you broke below Jan's lows, and you also turned the quarter red. That's a lot different than what we have here, all right? If you break below this quarter's open, that's significant, but you still have to come through this month's current gains, right? So a reversal becomes more likely when you have smaller bars, just by the nature of price. So that's why back here in January, there was that chance that we get a reversal at the beginning of the quarter, beginning of the year, because all the time, that's when all the time frames become aligned. But right now, as we stand, that bar does not look like this, right? So this is no longer a small month to take out. In fact, we have a bunch of green already, a lot of green, of 5%. So, we're just going to continue to watch and see when we're going to get that reversal on the monthly chart. Right now, we're getting range expansion. That means the bars are actually getting wider again. We had several months of small bars, small bar, small bar, small, small, and now look, the bars are getting larger, right? So that means we're getting range expansion to the upside, and that's why 2 weeks ago I said, we're melting up. Slowly, but that's what it's doing. So that's your monthly chart on the SPY, and now we're getting the Bollinger Band walk as well on the SPY. So there's the Bollinger Band, break above the Bollinger Band. Now we're doing the Bollinger Band walk like we have an inverse to the VIX. This is Bollinger Band walk to the upside on the SPY. We had that small reversal here, downside bar, then upside. Now 3 positive higher highs on the SPY. So if you take a look at the 2-day chart, you got Momo up. You had 8 consecutive bars with higher highs. 1, 2, 3, 4, 5, 6. Sorry, 1, 2, 3, 4, 5, 6, 7. Sorry, 7 consecutive higher highs, and that's Momo up as well. See, here's your Momo bar, Momo up. If you recall back here, this is way back on the 25th of March. It's about 3 weeks ago. I said right away, we're going to take out that pivot high, and then if you take out the pivot high on this bar, it's Momo up, and you just need to watch and see how far it goes. So it's very apt that I called the series Market Watch, because it's just a watching game, and it's a watching game and a responding game. And again, by following this methodology, we've been staying on the right side of price more times than not, even during the volatile periods. Okay, so there's your SPY chart on the 2-day, and here's something you can watch now on the daily chart as well. We got Momo up on the daily as well. So there's your Momo up condition, Momo up. So there's your Wednesday, Thursday, Friday, Momo up. Slow moves, 1% moves to the upside, 1% move there on Thursday. But intraday, it's pretty choppy stuff. But it's just drifting higher. What else can you say? The momentum's to the upside here now, and hard to fight that. Okay, let's go to Qs. As I mentioned already, Qs congrats, all-time highs on the Qs charts. We go to that monthly chart. We had the reversal we've been calling for. We got those all-time highs as we signaled a while back. Once we saw this pattern, once high got taken out, we knew we were going to go after that high. That's the all-time high, and yet we broke above it, and there's all-time highs on the Qs. Blue skies now. How far does it go? Who knows, right? Who knows? Once you get those blue skies, if the buyers keep stepping up, and now we got a Bollinger Band walk now, possibly a Bollinger Band walk to the upside. Now we redraw our levels. It just needs to stay above last week's lows. So long as it keeps going up here, this thing can go significantly higher. So the neat thing with the Qs here is that it really started here, right? So we call on the all-time highs here, right? So this bar here was significant. The 15th of March, that week there, once we broke above that inside bar, it became significant, and at that point I was saying it's very likely now that we come out the other side and take out that outside bar. Why? Because that's a Momo down reversal sequence. Momo down, inside bar, stops the momentum guys to the downside. That bar stops out a lot of people. This is a fake out bar. So here, when it breaks to the downside here, it takes out that low. Some people who got long here got scared out, and they may have shorted, or they may have closed out their longs. The fact that we repaired that bar, and then we broke to the upside, that's another buy entry right there. If you want to take the weekly chart, that is a reconfirmation of this pattern, the Momo down reversal. And so long as this is how you frame it. So long as when you see Momo down reversal pattern like this, so long as you don't take out that low right there, that pattern is still in effect. Okay, so this pattern here, that when you have a Momo down, so long as that low doesn't get taken out, it's very likely you come out the other side because it's Momo down. We know it's going to take out that outside bar high because of the broad information playing itself out. So because we know the stops there, right? It's not because it's magical line or it's magical bars. What we know is that there's actually stops right there, and there's people who got short. So the market's going to cause the most amount of pain most of the time, and the max pain is to take out those guys who got short, and they're going to get the squeeze, right? So they took them out this week, and they went a little higher just to make sure anyone who got short here was thinking they were pretty smart, got stopped out, right? If not, they're sitting in the red now, and it doesn't feel good because now, as I said already, you got blue skies, and if you get these breakout guys who are in now, and they're in here now, right? The breakout guys who bought the prior high, they're gonna squeeze them so long as they can attract more buyers. Yeah, and who got short here, didn't close out yet, they're definitely getting the squeeze. So there's your Momo down, and this. If you don't understand this, what's happening here is that this is an inside bar break to the upside. If you put your stop too tight, and you might, you break to the downside, you get stopped out there. But this bar gets repaired as I said already. And once you break back above this high or back above that high again, the pattern is still playing itself out. I've accustomed myself to seeing this price action, right? I can see that this pattern here is still in effect. That means that the pattern is still valid. It has not been broken yet. But if I've been saying in the past few weeks is that if you have a hard time seeing these things, then this is why you want to use custom timeframes. So if you don't have a charting platform that can do custom timeframes, then you need to train yourself to be able to see these things. But if you do have something like TradingView or many other charting platforms that can do custom timeframes, then you just want to look at different timeframes to see, give yourself a different look. So past couple weeks I've been sharing the 2-week chart, because it's pretty clean, and there you go. All right, so outside bar down, that's Momo down. You get your inside bar, right? There's your Momo down. You break to the upside here, Momo down reversal. You're definitely going to take all that high. That's what we did this past week. All right, so I do this across many time frames when I for my own trading, but for these weekly videos, I really find that if you can really see the bigger picture and not get stopped out or get tricked because of the volatility, that will help you stay on the right side of price. So using those custom timeframes, especially using the higher timeframes, can help you with that. So there's that Momo down reversal playing itself out. Now take out the high, and how far does it go now? Let's watch and see if we can take out, if it goes Bollinger Band walk to the upside, or you break below this past week's low to extinguish that Bollinger Band walk. On the daily chart, this is the interesting thing here, right? So going into last week, we had the outside bar that closed Friday. So the question, remember, if you look at last week's video, the question is what's the next bar after the outside bar? Because that's significant, right? This in itself is not enough. If it goes Momo up, then obviously we know what that means now. But if I go Momo inside, right? So outside bar inside, then what sets up there? Well, look what happened here. Outside inside pops to the upside. Okay, so that's your resolution there. Then they faded it on Wednesday. So they faded on Wednesday, and look where they found support. Right off that purple line. The What's that purple line? The weekly open. So the buyers stepped up, they defended that, and then on Thursday they stopped out anyone who got short on Wednesday, and on Friday, really tight day on the Qs here, just really tight stuff. Not a lot of fun to trade that stuff, frankly. Yeah, pushing higher to those all-time highs. Okay, so there is your Q chart. So down, same picture, all-time highs. And I'm not going to belabor the point. This thing's doing the Bollinger Band walk as well, so we'll just readjust our levels here so you can see that more clearly. And it's Bollinger Band walk to the upside. How far do these things go? Again, you just got to watch and see. So that's basically the theme for this week's video. Is just it's a watch and see market right now. Again, the bias is to the upside, and until we break that Bollinger Band walk, there's no point taking those shorts. If you do, those are really profit takers. It means you got to be quick on taking profit and not be looking for long shorts, to ride, because the trends are up, right? You got the quarterly open up, you have the monthly open trading above that. The weeks are green, so yeah, you're fighting price if you're trying to short this. Russell now. This is the chart that I'm watching for to see if we can play some catch up. So far, Russell trailing behind the other indices because it's hasn't hit an all-time high yet. Currently, how many higher highs have we had? 1, 2, 3, 4, 5, 6 months of higher highs on the Russell, and then we have an inside bar right now. So not bearish, right? So this is not a bearish month so far. We're still trading with a green month. It's up 1.68%, and it's a green quarter right now. Okay, so even though it hasn't gone anywhere, shorting it hasn't been very successful either, has it? so right now the bears are actually having a hard time pushing this thing further. They've had their chances, to be honest, but now the Russell is comprised predominantly of a large portion of the Russell are these regional banks. They've been performing pretty well. So if these regional banks continue to outperform, and some of these smaller cap oil names outperform, then yeah, the Russell can certainly catch up very quickly. And so what do I watch for this week? Well, look at the Russell here. Okay, so in the Russell, we have this pattern, inside bar up and down, right? So this stopped out some short-term traders or shorter-term traders when it took out that prior bar's low. But we still have the alignment to the upside. Still green quarter, still green month. So now, guess what? If you break above, right? If you stay above, as long as price doesn't break below that low, this pattern is still in effect. So I hope you're beginning to see what I'm alluding to here now. Because if I go to the 2-week chart, you'll see how clean it is. All right? Outside bar and up, that's Momo up, inside bar. Now guess what? So long as you break above there, that's going to be a continuation of the upside, right? And you can quickly see this high get retaken out, or at least we're going to continue this Momo up move. So even though it's playing out very slowly, because we've had basically 2-3 weeks of just basically consolidation inside of this mother bar, the bias is still to the upside, because we're not getting any lower lows, right? So until you can take out that low, right, that's this bias is to the upside on the Russell chart. So that's what I'm expecting to see this week, is for the Russell to begin to pick up some steam now, as the rest of the indices have already shown the way. So on the 2-day chart, we got something really nice setting up here. There, the inside, outside, inside, right? So there's your outside, inside, inside, outside, inside, outside, inside. You break above that on Monday, Tuesday, and you're off to the races, and you're gonna go back and hit those all-time highs. So Russell, so long as you don't break below, again, this prior low here, right? This low here from this week's low, right? The last week of March. As long as you don't break below that, this pattern is still in effect. We can definitely get those all-time highs. Let's go to the TSX. And the TSX, being strong and weighted in highly weighted in commodities. Look at this chart. That's all-time highs, right? You can see the all-time highs there, and yeah, it's blue sky. So it is also, if I'm not mistaken, close to doing a Bollinger Band walk. Not quite there yet, but close, and that's what we're watching for this thing to do what the rest of the indices are doing on the US side. And that's basically to keep stretching to the upside. Even though it feels really stretched right now, and I think, I looked at the before I started recording here, I looked at the reading, the number of S&P 100 stocks trading above the 50-day moving average. I think the number is like 92%, something quite high. So in the mid 90s, 92, 90 area. we have a lot of stocks right now that are participating. So we have broad participation by the underlying, and there's no reason we can't go higher. So people are saying, well, that's a really high reading. That means it's really stretched and extended, isn't it? Yes, and that's true. It is very stretched and extended, but you can't. That doesn't mean you step in front of that train. The reality is that that becomes more significant when we see less market participation, less underlying participation. So if we get a pullback on the U.S. equities, and then we achieve a higher high, but on less participation, that's when you see that negative divergence. But until that happens, this thing can continue to get stretched, and yeah, price continue to move higher. Let's go to emerging markets now. So emerging markets, EM. I think this thing is due for a possible move to the upside. So here we have so far an inside month, right? So there's your inside month for emerging markets. We went up, we went down, so that's reversal there. Buyers stepped in and create the consolidation. They create the basically the stalemate here. And now, where do we go from here? If we take out that pivot high, going after those all-time highs, that'll happen if we can take out last month's highs. So on the weekly chart, slowly playing itself out. This is what's tricking people, is that because things are basically going sideways here and it's very, very choppy, people are getting chopped up and the trading is actually very, very slow, right? So it's inside bar down, there's your inside bar reversal, and so long as this low doesn't get taken out, that one there, that's March's low, as long as that doesn't get taken out, this inside bar reversal pattern to the upside is playing itself out, and we expect it to take out that pivot high. Okay, so all these charts look the same. I don't know if you can tell right now, but they all look the same, because if I do the same custom time frame again, the 2-week chart, what's that look like? Yes, Momo down reversal, setting up on emerging markets. Momo down, inside bar, you break above there, that's your continuation on the 2-week chart, but it's already happening on the weekly. All right, so it's already happening on the weekly. So long as you don't have that low taken out there, this pattern plays out and takes out that pivot high. So emerging markets can certainly play some catch up, just like the Russell. Let's go bonds. Bonds was was the big point of focus at the beginning of the month, maybe at the end of the last month. So yeah, at the end of last month, we had a multi-month pullback there, or sell-off. But now bonds have basically stabilized, and it's a lot of it's because as I've been saying in the last few videos, is that the bond market probably got ahead of itself, because you don't typically get moves like this. When you have a 14% down move on bonds, it's probably got you have momentum guys getting in there, and usually momentum traders don't trade bonds, right? They just don't. So those guys are out of that trade now, because the momentum has basically been extinguished, and now we're back to the normal trading ranges for bonds. And as I said in the last video, or the week before that, yeah, I think I said at the beginning of the month, the beginning of April, the issue with bonds here now is that you're going to have more than likely you can have an inside quarter, right? Because unlikely we're going to see bonds step up and all of a sudden go huge green month that takes out the prior quarter's high. Unlikely, right? So even if you have a big rally in bonds, you're probably going to get stuck in Q1's range. So even though you might get this temporary short-term bounce, a lot of it's going to be due to short covering, because you got a bit too extended. So we're probably going to have an inside quarter. Right now we have an inside month. So this may not stay an inside month, because we have a lot of month left, 2 weeks left. We could take out March's high, and that would cause more short covering. But I still do believe that we do probably see more, I'm not going to prognosticate or predict, but here, here's the pattern, right? So inside quarter, that's probably it's going to remain that way. So we still have a lot of quarter left. There's still 74 days left in this quarter. So however this bar ends, it's going to probably likely be an inside bar. So the next quarter, you really want to perk up and see if this remains an inside bar. Next quarter, which direction does it break? If it breaks to the upside, yeah, we're going back to the upside on the bonds chart. But if it goes inside bar and down, watch out. We're going to get back, to the bond selling. We might get that 2% yield, that 2%, short-term interest rates on the 10-year. So that's something we've been calling it for. But it doesn't move in a straight line. This thing's going to take some time to play itself out. So for now, inside quarter, inside month, we may take out March's highs, because we've been slowly going up on the weekly chart. I called it right here, right? Going into this week of the 22nd of March, when we broke above that high, I said that's it for that move. That was the Bollinger Band walk down. This is what the Bollinger Band looks like. Bollinger Band walk looks like in practice. Once you break below there, it has to keep going, and it did. It went for 1, 2, 3, 4, 5, 6 consecutive weeks, and you can see that the rate of change and kind of the steepness of that trend increased to the downside when you get that Bollinger Band walk. Now, it broke that Bollinger Band walk here that week of March 22nd, and that basically causes short covering, because anyone who gets short here, they're quickly going to get stopped out if they don't, if they don't take profits. That's what's been happening. It's kind of been a choppy move, but for the most part, if you haven't noticed it yet, the Qs and the long bond, the TLT here, are very, very correlated recently. We have like plus 6% correlate, or 0.6% correlations right now for the past, I think the past several months. So anytime the bonds go up, it's conducive to the Qs rallying, and there's fundamental reasons for that, obviously, because the short-term interest rates and long-term interest rates are affect the funding of growth companies. But right now, back to the charts. Right, we're just grinding higher here now, and there is your month of March high. Looks like it may be in play here. Your 2-week chart shows you right now you went inside bar up, so you're going after that high there. Right, so would not be surprised to take out March's high and really stop out those folks who got short of the TLT. On the daily chart, was a very nice pattern. So this is a nice pattern. I highlighted it last week. It was outside, inside, outside. Question was, what's going to be the next bar? Was it inside? That's even nicer. Outside, inside, outside, inside. People are getting chopped up in here. They're getting, if you're trading bonds, you're getting chopped up in here. And then the move happens. Outside, inside, break to the upside. This day here, the Q sold off. So the 14th, that was the Wednesday. Look at the Qs. This is when I knew during the week, intra week, this is actually nothing but a head fake. There's your Wednesday. Okay, on the Qs, it was down 1.2%. People got all panicky here on Wednesday, and I just looked at the bond chart and saying, this thing's going nowhere. So here, go back to that bond chart. Sorry, go back to that bond chart on the TLT. It's inside bar on the TLT product on Wednesday. It's not going anywhere. It's actually just the continuation of this move, outside, inside, up, inside bar, and then we get the continuation on Thursday. And look at that Thursday move on the QQQ. Nice move. Right there, right? So anyone who got short here, they get stopped out on this day here, up 1.5%. Okay, so very, very correlated right now. So again, you can see a lot of these markets, just the tight correlations and how they're trading. But right now, bonds trading in correlation with the Qs, also trading in correlation with gold. So let's go to gold right now. Let's go MGC. MGC, let's take a bigger picture for a second here. So let's take a bigger picture view of gold. I'll look at the micro gold futures contract. And so here's the 3-month chart. Let's bring it up. So gold has a lot of work to do, like the bonds chart. It's kind of the same pattern, right? Inside and down, inside bar. So this is likely also going to be an inside bar this quarter, right? So gold have to break out above 1962.5 to create an up bar. That is likely not going to happen unless something really crazy happens that causes the bond markets to just shoot to the upside and causes gold to shoot to the upside. Likely we're going to stay inside bar. We can definitely move up here and and cause more short covering, but more than likely we're going to get that inside bar in the month, quarter, excuse me. In the month, we no longer have that inside bar. So remember, TLT still has an inside bar. The gold charts already fixed it, already broke that inside consolidation pattern. It took out March's highs. Nice move so far on gold, up 3.77%, and there's the bottom right there. We saw it right here. There's the Bollinger Band walk to the downside. Again, I apologize if this is getting repetitive, but these charts are they're so correlated that they all basically look the same. So basically, it's it's a Bollinger Band walk to the downside. It broke it right there. We flagged it. I'm like, okay, there you go, breaks the Bollinger Band walk. Now you got to watch out because it can do its back and forth churn. It took a few weeks to play out, right? Breaks the upside, extinguishes the breaks the Bollinger Band walk, stops out some short-term guys. Inside week, which way to go? Downside. This is actually a short here that looked attractive. Issue being was that it was gonna be tough to break this inside month, and the buyer stepped in exactly where they need to defend that, creates that big bar, and then we said that's last week. Okay, you break above there. There's your inside bar reversal to the upside. That's what happened. Inside bar reversal stops out those folks, and now we grind higher on that weekly chart. So here on gold now, MGC, we got Momo up. Okay, so now we actually got momentum in gold. Momo up. So that's Momo up happens when it breaks above an outside bar. So Momo up, up, up. So 3 higher highs. Now we've got the Bollinger Band walk once again. Just wait and watch to see how far it goes. So let's get on to digital gold. And man, it seems as though, we're in this generational shift right now where the narrative is that, Bitcoin is not only a good alternative to gold, but it's also a safe alternative. And maybe the younger generations just don't care to hold physical gold. They feel comfortable carrying a BTC. And so, man, BTC has been on a tear, a bit of a break now, right? So this past week, pretty indecisive trading action. Although we did hit some all-time highs earlier in the week, but we did have a week now where we have this basically a shooting star. We still got basically a day left and 5 hours. What I can tell the charts here now, so they could certainly repair this chart. It's a shooting star right now, but it doesn't mean this is not negative by any means, right? This is still a green chart, way above the quarterly open, still a green month. And in fact, if we look at the Bitcoin chart, we have a small setting up here that I think is quite interesting. So on the 2-day chart now, we have an inside bar and down. If you break above that pivot high on Sunday evening, so the new week starts at 8 p.m. on Sunday, Eastern Standard Time. If you break above that high there on, so I'm just going to redraw the ranges here just to make it very clear. So let's redraw our ranges. I'll delete this line here. Okay, so excuse me, we'll go to the 2-day chart. On the new week, when it starts, you break above that high, we're going after that pivot high, and then likely we can take out that all-time high once again. So not as bearish as it seems, because the buyers are stepping up and defending that quarterly, so that weekly open right there. That purple line is your weekly open. Okay, so there's your monthly open, weekly open, quarterly open is that yellow line as well. So still a lot of levels to defend there. I think I'm actually take this trade here. That's setting up in the next hour or so. Here, it's a move to the downside, right off of that weekly open. See how the buyers are defending it? Every time you tag that weekly open, you have buyers stepping up and defending that level. So we get a break above that high there. I actually might take this trade, because as you see from this projection here, is that if this low holds, okay, if this low holds, you see that there, it's going to come through. We have a bigger broad information playing itself out here. All right, so you can see here now that if this low holds, we have a chance for this can come out the other side and take out pivot high and go to those all-time highs. All right, so that's the way that the BTC is trading right now. So I'm just going to show you one quick chart here. Let's go to the 1440. So we have this, this upper trend line now that has basically been put in for over the past few days. So we have that high is higher than that high now, and as we can see, that there's a good chance for this thing to come out through the other side and then retag that upper trend line. So that's what I'm watching for. Again, I'll probably take that 4-hour setup here if it sets up properly in the next in the next hour or so, if that thing stays in place. So BTC has been kind of underperforming so far this week, and that's when you typically see traders, and I've been trading crypto actively since 2017, so these have been phenomenal markets. I'm long many coins, about 28 coins at present that I'm currently long. And if you've been trading cryptos any time, for any many period of time, you know the playbook, right? So when Bitcoin takes a break, you go to the altcoins, because that's how traders typically hedge themselves. Is that maybe not even hedge, but they get some extra juice out of their trades. When Bitcoin takes a break, you jump to the alts to get more exposure, to get more returns. So this past week, because Bitcoin has been sort of underperforming, but it's not bearish yet, the place to be has been the alts. So everyone knows if your head has been in the sand, then that Dogecoin has been rallying. That was the story yesterday. Dogecoin hit all-time highs, huge 500% move. See Doge here on Dogecoin. So this thing Look at the move on that. So clean. This is, if you don't trade the cryptos markets, it's, and you look at the just the equity side, it's hard to beat how clean these charts are. So clean. Inside bar, and look at that move here on Doge. Was up 5% for the month of April. But basically, like I said, mentioned last week, you just have to look at all the altcoins from the last bull market run are now having their time in the sunlight, in the spotlight. So you can just go through the basket of them, and that's why I have so many of these in my bag right now, so to speak. So I don't want to talk my bag too much, but I can just go through the list of them. So if you remember the last cycle's bull run, all the names like BSV USD, so that's Bitcoin, BSV or BECH, you can just pick all of them. Look, all-time highs on BSV. We had Monero, ETC hit ETC USD, so Ethereum Classic hit all-time highs yesterday. Look at that move there, right? You see how this high there, higher than that high there, right? So all-time highs on ETC. Just go down the list. I could spend a bunch of time here going through all of those names that have now have recaptured all-time highs. But the play now is to find some of those coins that have not recaptured all-time highs yet, but appear ready to. So names like Monero. So this I think is a good setup. USD, just got to find a setup now to get into that one. XMR USD. Look, we're so close. All-time high at 477, trading at 363 right now. So you got at least another 100-something point range there available. LTC here, this one here has a little bit of catch up to do as well. LTC got a little bit of range left on that one, long on that one as well. But the list goes on and on. Don't want to belabor the point. So one last chart I'll conclude with here is the shit perp chart. This is one that I've been watching carefully because this is really very indicative of just how hot this cycle has been. And last week I've been saying we're doing the Bollinger Band walk now, right? So that's kind of been the theme of this week. Once you get these Bollinger Band walk, things can go a lot further than you think. Because had you thought that the end was here, right, back in March, you were wrong. Because now it's gone how many weeks? 1, 2, 3, 4, 5, 6 consecutive weeks of higher highs. Now last week we did get this bar, right? So this was the outside bar that broke the Bollinger Band walk, but it closed green. So how do you fix that? So I shared this chart. I've been sharing this chart on BitClout, that new social media platform that is crypto based. I shared this chart earlier week. This is just a chart that I like to watch. Is how do you fix a chart like this, that where you have a Bollinger Band walk that has been broken? What needs to happen for this thing to continue? Well, as I said last week, you either go outside inside for some consolidation to consolidate that through time. You go outside bar down, right, where it's actually a sell-off, or you do that, you go outside bar up, and the momentum actually continues because you're back in the Bollinger Bands now, and things once again, the game restarts. So you're back in the Bollinger Band walk, and again, I think that's been the theme of this call, right? This video is how far does this thing go now, and the answer is you're just gonna need to watch. Just watch for this low here, and see if we put in a lower low. All right. So there is your market watch for the week. Hope you guys enjoyed it. Let me know your comments. Either drop a line in the comment section on YouTube or head over to the blog at thetradingedge.org or find me on BitClout. Love to see you over there and share your feedback on that platform. So I wish you a great trading week. As always, if you like these videos, smash the big like button, subscribe to the videos, support me on YouTube or on the blog or on BitClout, and always happy to hear your feedback. All the best and good trading.